In your wallet this morning, new tariffs could take a massive bite out of your budget. The Tax Foundation is warning the average household will pay $2,100 more every year under the new tariffs. America's import tax is jumping from 2.5% to 19% this year. That's the highest since 1933. Fitch Ratings says rates will climb even higher, reaching century-high levels. Economists now widely predicting a recession both here and globally. And food banks nationwide are facing a crisis after those federal cuts. The Agriculture Department has slashed more than $8 million in funding, leaving pantries with less food to distribute. Rural communities will feel the deepest impact as they rely most heavily on the USDA-funded programs. Food bank directors say they're scrambling to find alternatives to keep serving their communities. And Apple shares tumbled nearly 9% yesterday, shortly after the market opened. That's a nearly $300 billion loss in market value. It comes in the wake of President Trump's tariff announcement. The iPhone maker could take a significant hit from tariffs when importing goods for U.S. consumers. And another reason to not trust everything you see or read online, the IRS is warning taxpayers about bad tax return advice you may see on TikTok and other platforms. Josh Sidorowitz tells us how some Americans may be following false claims and missing out on legitimate deductions.
Scroll through social media and you will find all kinds of tips to file your taxes. Some claim tapping into obscure credits can even net you bigger refunds, from writing off your car or even your pet to hiring your own kids. But tax professionals caution following some of it could lead to fines and delays getting any refund you're actually owed.
There's just enough truth to be dangerous.
There's usually some credibility in the claim, the credit, the deduction. It does exist, but not the way they phrase it, and certainly not with the way they're intending it.
The problem prevalent enough now, the IRS says it is stepping up reviews of returns that claim these other withholdings, saying instead of looking to ill-informed information on social media, speak to a trusted tax professional. More than 700,000 taxpayers at the end of last year were still waiting on their refunds that were frozen for review by the IRS after claiming credits they potentially weren't eligible for. The National Taxpayer Advocate's annual report to Congress in January partly blaming misinformation on social media. Jackson Hewitt Chief Tax Officer Mark Stieber says the biggest mistake people make is not claiming credits they do actually qualify for, like the earned income and the child tax credit.
Here's the thing that people don't really fully appreciate. If you leave off an income item, if you leave off your crypto, the IRS is generally looking for that and you might get a question. But if you leave off the earned income credit, which about 1 out of 5 do every year, or you leave off a deduction related to your self-employment, the IRS doesn't say, oh, wait a minute, they don't add back deductions. They don't add back credits. You don't get a bigger refund from the IRS. You leave it off, it stays off.
And a lot of people are leaving a lot of money on the table. The IRS said in just 1 year, eligible taxpayers left more than $7 billion unclaimed, and that was just for the earned income tax credit. This year's filing deadline is April 15th.